My first bull market was obviously the most dramatic because we came into it with gold being constrained by fiat, price controlled. But the gold price ran in 11 years from $35 an ounce to $850 an ounce, a handsome move indeed. The second bull market might be more constructive, where the gold price moved in US dollar terms from $253 an ounce to $1,950 an ounce. So when people say to me again in US dollar terms, listen, the price has gone from 1,000 to 1,800. Have I missed it? Well, not if past is prologue. If you observe my favorite tool, which is the Barron's Gold Mining Index, what you'll see is that cyclical declines in secular bull markets are frequent and sometimes breathtaking. 15 to 25% downdrafts are common. They're unnerving to people, but a gold bull market wasn't designed to be good for the nerves, Shay. If you believe, like I believe, that gold does well when people are concerned about the efficacy, the purchasing power of their savings, that's my belief. And if you look at the ongoing things like quantitative easing, which as we discussed before is really counterfeiting, or debt and deficits, whether in your country or mine, or negative real interest rates, I would suggest to you that the tailwinds are all in place for precious metals and precious metals equities. I would suggest too that the malaise, if that's the right word for it, given the current confidence around the world and given the relative strength of the economy from liquidity, means that gold investors might have psychologically trying times for 6 more months. Not inconsistent, and from my viewpoint, extremely, extremely welcome. You know, if you make money by buying low and selling high, and you intend to be richer over the course of the decade, why wouldn't you appreciate the opportunity to buy more bullion or more gold equities at more attractive rather than less attractive prices? Very recently, the precious metal that is garnering the most attention has been silver. In the Sprott universe, we have become the largest buyer of good delivery physical silver in the world. So I suspect that the topic which will garner the most attendee interest will be silver. As you know, Shay, this is a conference that's been around for a very long time. And I think that you'll see attention paid to a wide range of commodities. I think that certainly this year, I'm going to be talking a lot about the opportunity in oil and gas equities, as an example. I've been, as you know, a very vocal proponent of the uranium market. Unfortunately, the junior uranium equities have performed too well. I can't talk about them with a straight face anymore. They've doubled or tripled before the uranium prices moved. Probably my own fault on social media, I don't know. But I suspect, in direct answer to your question, that precious metals will garner most of the attention, and silver in particular will garner attention. I'm of mixed minds about that. I think that the younger Reddit-style investor has done something that I consider to be impossible, which is they've actually tightened the physical silver market. I wouldn't have believed for a very long time that 2 million young people with cell phones could do what the Hunts couldn't do. But there were 2 million of them, and they were unleveraged. They didn't have to worry about margin calls. So they've in fact done it, which is interesting. What's more interesting to me is, you know, some number of them will drive on. Some number will think this is sort of GameStop on steroids. They'll get bored and drive on. But 2 or 3 million young people have been introduced to the silver topic and the precious metals topic as a consequence of this, coming to understand that, you know, precious metals are in fact real money. And I suspect that this will affect real changes in the silver and the gold market. 2, prior experience tells me that the second half of a precious metals bull market is silver dominant. Precious metals bull markets are led by gold because it's a fear buyer that takes gold out of the doldrums. But when the narrative is established by momentum, the silver narrative is stronger than the gold narrative. That's why they call it poor man's gold. And I suspect that the latter half of this bull market, which I think we're coming into, will be a circumstance where silver moves both further and faster perhaps goosed, if that's the right phrase, by this move that we've seen in the physical market by these younger newcomers to the market. You know, you've got the big thinkers of the world, you know, Biden and Merkel and whatever that young economic superstar's name is, Greta, I think her name is, who are anti-oil. But the rest of the world has a different viewpoint. Oil is the most efficient motor fuel in the world. We will hit peak oil demand somewhere around 2045. But right now, sustaining capital investment in the oil business is not enough to maintain current supplies. And as demand continues to increase, albeit slowly, and supplies falter, the price will do very, very well. Your listeners, when they think about the efficacy of that statement, need to ask themselves a simple question. In 5 years, assuming that they're not multimillionaire Tesla owners, they walk from their bedroom to the garage and they turn the key to the right, will the car start? Because if the answer to that is yes, then the price of oil has to stay above the incentive price to produce it, which is to say $55, $65, $70 US a barrel. And if the price remains above $65 a barrel on a free cash or net present value basis, global oil and gas equities are still very, very cheap. Sometimes you have to work a decade to be an overnight success. And I suspect that's what's happened with regards to palladium. It's important to note that PGE metals are important contributors to our quality of life in the West where we can afford it, because their primary application is in air quality, reducing the harmful impact of emissions from internal combustion engines. And in that sense, electric vehicles ultimately notwithstanding, for the next 25 years, most of the world's going to be burning internal combustion engines, and we will need to deal with the effluent from that. The supply side is what's curious. Most of the PGEs in the world come from 3 countries. South Africa, not the model of stability. Zimbabwe, almost not a country. And Russia, which of the 3 is a paragon of stability. But if you were to experience social or political disruption in any of those markets, you would see markedly tightened PGE supplies. And I would argue higher prices. The reason that I would argue higher prices is that it takes a reasonably small amount of platinum and palladium, platinum and or palladium, to populate an internal combustion engine that allows the sale of an expensive car. In the United States, as an example, about $125, $35 to sell a $50,000 or $60,000 car. If the price of platinum and palladium were to double, it wouldn't change the shelf price of that automobile. So in the near term, demand is very inelastic with regards to price.